Good morning. Last night was the President's State of the Union address, and in that record-length State of the Union, President Trump framed falling inflation, rising domestic energy output, tighter border enforcement, and expanded tax relief as the policy backbone of his second-term agenda heading into the 2026 midterms. But what we want to focus on today is something called the Lindy effect. You can see it on your screen there. And the Lindy effect, we're going to get to it in a second after we do the markets, but the Lindy effect as a concept, in combination with what we know about Warren Buffett, may lead you to think differently about what is money, what is not money, and what will be money 5,000 years from now. Let's start with the markets. 10-year yields are up 2. The dollar is unchanged bid at 97.88. The S&P 500 is 69.13, up 26. NASDAQ is 25.083, up 68. The VIX is 19.04, down 52. Gold is 51.82, shrugging off a decent percentage of yesterday's move, up $40 almost. Silver, completely ignoring yesterday's sell-off, now trading over $90.52, up $3.46. Keep in mind that the Shanghai premium over the US has widened again. It's still in the margin of error for being, quote, normal, but it has widened, and that shows that Chinese demand is there. China is the buyer. Whether they're short or bullish, I don't care, but China is the buyer. Copper is up almost up 6 cents, 5.93. WTI 66.20, up about a penny or two. Natural gas 3.11, up 4 cents. Platinum up $149, trading 23.10. And palladium 18.27, up only $53. Gold, silver down $1.70. Grains are mixed with soybeans doing a dead cat bounce. Okay. Today, I want to introduce a concept that may change how you think about money, value, and survivability over time. It's called Lindy's Law. Now, Lindy's Law is not an investment framework in the traditional sense. It does not tell you what's going to outperform next quarter. It does not forecast returns or optimize a portfolio. What it does is something much more basic. It asks a survival question. Lindy's Law is an empirical observation about non-perishable things like technologies, institutions, and monetary goods. And it says that the longer something has existed, the longer you can reasonably expect it to continue existing. Put differently, if something has lived for X years, you may reasonably assume it could live for another X years. Future life expectancy scales with current age. What does this have to do with Warren Buffett? When you place that concept next to Warren Buffett's concept of a protective moat, the overlap becomes obvious. Buffett looks for businesses, or he looked for businesses that can defend themselves against time, competition, and changing conditions. He asks a forward-looking question. What will still be here decades from now? Interesting how he's missed out on gold, right? Lindy approaches the same problem from the opposite direction. It looks backward and asks what has already proven that it can be. Buffett's moat is prospective. Lindy's filter is retrospective. And this distinction becomes very useful when we talk about money, because money is ultimately a coordination technology across time. A coordination technology across time. A store of value only works if enough people believe it will preserve purchasing power into an uncertain future. And that belief is not granted once. It has to be earned repeatedly through performance under stress. Remember that phrase, performance under stress, ecosystems, inflation, war, fiscal expansion, political turnover, technological disruption. Each of these is a stress test for monetary trust. An asset that survives multiple regime shifts begins to accumulate institutional memory. Legal frameworks form around it. Cultural reflexes develop in its favor. Settlement infrastructure evolves to accommodate it. Over time, the longer something survives, the harder it becomes to replace. That is where Lindy intersects with gold. And believe it or not, crypto, which we'll come to in a minute. Staying with gold. Gold has functioned as a monetary asset across empires, continents, and technological epochs for thousands of years. It has survived the move from coin to paper, from Bretton Woods to fiat, from analog settlement to digital clearing systems. And each time confidence in newer monetary technologies degraded, gold reemerged as the reserve layer beneath them. So under Lindy's law, that longevity carries probabilistic weight. If gold has survived as a store of value for 5,000 years, then its expected remaining lifespan extends accordingly. This is Lindy's law. If it has lived for 5,000 years, you may reasonably assume it will live for another 5,000 years. Now compare that to fiat. Everything essentially is at its midlife when you look at it. As much as we would like fiat to last indefinitely, most fiat regimes rarely survive the full arc of fiscal expansion and political turnover. Their flexibility allows them to respond to crisis, but that same flexibility shortens their Lindy tail as stores of value. If a fiat system has existed for 75 years, Lindy suggests that its expected remaining lifespan as a trusted store of value may also be measured in decades. And crypto presents a similar dynamic from a different angle. Bitcoin and other digital assets attempt to engineer durability through fixed issuance and decentralized consensus. In Buffett's language, they are attempting to build a moat through code, but Lindy does not evaluate design intent. It evaluates demonstrated endurance. Crypto's monetary history is measured in years rather than centuries. That does not mean it will fail. It means only time will tell if you can stand the test of time, which brings us to Tether. Tether has historically been a staunch advocate of Bitcoin and the broader digital asset ecosystem. They see the potentiality for it to be the ecosystem that handles money in the future. Yet over the past 2 years, they have also begun allocating capital towards physical gold. So the question becomes, why? Public commentary from the CEO, Paolo Ardoino, offers some context. He has described Tether's evolving strategy as building an ecosystem of investments that can survive economic breakdowns. In his words, quote, "We are building an ecosystem of investments that can survive a future breakdown," end quote, which is essentially what I just said up top. That is Lindy's effect. And he has also emphasized preparing for scenarios where parts of the traditional financial system may stop working. That framing closely aligns with Lindy's logic. Rather than relying solely on engineered durability, Tether appears to be diversifying into assets that have already demonstrated endurance across multiple monetary regimes. In that case, or in that sense, I should say, gold's inclusion in their reserves is not a repudiation of Bitcoin. There's something that Hartnett likes to talk about when he's describing investment portfolios. He talks about barbell trades. If you think there's going to be inflation, you buy gold. If you think there's going to be deflation, you buy bonds. And they're at opposite extremes. And those are kind of like tail risk hedges. So he calls them a barbell trade. Everything in the middle is what your normal portfolio is. Well, Tether owns one side of the barbell, the replacement for gold. And what if it doesn't replace gold? You have to own the gold, right? Monetary resilience, code, and a hard asset. Anyway, gold's inclusion is an accommodation that survivability in extreme scenarios may require exposure to assets with long Lindy tails, like gold and silver. Gold does not need to be engineered to survive future regime stress. It already has. And under Lindy's law, that history carries forward into expectation. I'd like to give a hat tip to Nick Morianis of Silver Gold. We were having a conversation about Buffett's moat a couple weeks ago on Sean Newman's podcast. And he mentioned the term, and I'm familiar with it, but it had been a long time since I read about it because people used to talk about Buffett and Lindy's law together. And after doing some research into Tether, those guys are Lindy's law people. They understand that if you're going to hedge what the cutting edge is, you have to hedge it with tradition. And so when you put the two together, you could have the world's hardest asset of all time. Anyway, gold and silver are the longest living assets on Earth. In fact, right now there's a new narrative going around on Wall Street called the Halo portfolio. Heavy on assets, low on obsolescence. So basically, companies that have hard assets and have a low chance of going out of business. Now, they apply this to technology, but think about that conversation. What asset class is heavy on assets, hard assets, and is low on obsolescence? What asset fits that better than gold and silver? For that effect, that halo implies you should be buying miners as well. Anyway, thank you for listening. Blow by blow, President Trump's State of the Union address. We sent that out this morning. President Trump's 109-minute State of the Union focused on border enforcement, domestic energy expansion, and tax relief as central pillars of his second-term agenda. He cited declining inflation, strong employment growth, and record investment commitments as evidence of economic recovery while defending tariff policy following recent judicial setbacks. He's going to get his tariffs one way or the other. That was sent out this morning. The Lindy's Law, the full explanation and history of it are going out this morning at about 9 a.m. Gold and silver as the ultimate stores of value. Look for it in your inbox. This week again is PPI. Today, Fed President Tom Barkin speaks. Not sure that has much of an effect on the markets themselves, but let's take a look at the charts. That should be more fun. I haven't looked at them yet, so this is my first look. Okay, I said yesterday, if you're going to get short now. And now we're halfway back up that short area. I don't know what the market should do today. It should go through here and higher, but it is running into this, and it's respecting it. And I wasn't factoring that to be respected before, but it's being respected now. Anyway, we're on trend. Nobody's going to retire today. Well, maybe the miners people will. Silver, far more interesting to me. By the way, I have that position on, and what I'm doing is every time the market goes up, I'm buying miners. Essentially SILJ, not the specific miners that I'm talking about yet, but SILJ is what I'm buying right now. Okay, so there's Polly, and Polly kind of agrees with me, meaning I said yesterday, sell it here or sell it at 110, I think was the expression that I used. Meaning this is a level that it should at least reject the first time. And if it gets above here, it should go, well, there you go, 94.50. So Polly agrees with me. So it should pause here. If it gets to this level, expect it to pause, and then we get an idea to see if this thing really jumps back on that old trend up here. Anyway, market looks great. This is China buying. Either China's bullish or they're nervous shorts, but they keep buying, and this market's going to keep going up if that keeps happening. All right. Have a great day.